Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. So first up is HTGM. Okay, congrats everyone, closed up 23%. You've got RSI and Fasto both in the overbought power zone now. The big move today was the break above the 100-day simple moving average at 230. That's the gold line. A doji formed on Friday signaling the bounce. It was holding EMA 13 support, and then today there was a bullish close above the closing price on the 17th at 250 and above the 300-day simple moving average at 273. So that was a really nice close. It also closed above this July 17th closing price. The key level to break now is the 200-day simple moving average at 294. That's this red line, and then the closing price from back here in June. And so if it can break above this 3 resistance zone, this 290 to 3 resistance zone, it should head higher. If it fails to break resistance, you could see the candles work back into the bands, and then 250 and EMA 4 here at 247 are the key levels to hold. Notice there was a big volume spike today. If you take a look at the HTGM weekly chart, you can see here it's really heating up. It's got RSI at 53, so it's back above 50. It hadn't been above 50 since back here in May, and so there's a lot of room to run until the 70 overbought zone. Fasto's now at 88. You've got a nice pinch right here on 80x with plus DI pinched with 80x. Look for a bullish crossover. And so the big move here this week is the break above the middle Bollinger Band. Last week, this dotted purple line broke interweek, but it pulled back and closed right at that level, currently at 221. And then this week, this week's candle is forming above that level. That signals the possible start of a new uptrend. The top of the candle is hitting the 50 and 100-week moving averages. Those are the key levels to break. So 288 is the top level. If it can close above 288, which is the $3 zone, which is lining up with back here on the daily chart, with the big resistance at the 200-day simple moving average. Notice that that's lining up with a similar zone here on the weekly chart. If it can close above that for a week, that'll signal more upside potential. We want to see that $3 level turn into support, and then this new uptrend continue. So notice it was trading in a very strong downward channel. It found support down here, and then now this new uptrend has begun. Notice that you've got this bullish crossover on EMA 4 bullish crossed EMA 8, and now the candles are riding both levels higher, or both moving averages higher. Okay, so take a look at the HTGM 15-minute chart. You could see here it's got a really nice uptrend going. It did hit 280 for the high close. It's going to need to break above that level. The candles were riding EMA 4 on a big volume spike, so it was super strong into the close. The key support level to hold is down here at 250. It's at 248 right now, which is the middle Bollinger Band. As long as the middle Bollinger Band is holding, the uptrend is intact and there's more upside potential. Okay, so take a look at DEST. You've got RSI and Fasto both at overbought levels here. They're both in the overbought power zone. The big thing on this chart here is it's got a super strong uptrend going, and it had been working on filling this gap. There's a gap back here in July between the top of this candle and the bottom of this candle, or the top of this candle, the bottom of this candle. This is the top of the gap. This is the bottom of the gap. It broke above the bottom of the gap level on the 17th with this close above, and then it's been working on filling the gap. On Friday, it closed above the 100-day simple moving average at 243, signaling more upside potential. Now, in a pullback, that will be the key level to hold. Today, the gap filled. So when this red line broke, that signaled the gap fill. And so what needs to happen now, the top of the gap needs to turn into support. That's always a tough resistance level to break. You could see some consolidation here. If that happens, the key level to hold is this gold line at 243. You want to see that level turn into support if you're a bull. If the candles can keep pushing higher, then the next key level to break is going to be the 200-day simple moving average at 349, and then the bottom of another gap, which is from back here in June. And so the bottom of the gap's at 360, and that's lining up, just above the 200-day simple moving average at 349. So that's going to be the next targets if this uptrend can continue. And so a gap fill for this June gap would be a run up to the 300-day simple moving average at 449. Okay, so take a look at the DEST 15-minute chart. It's been super strong. a very, very nice uptrend, and notice during the uptrend, it's been hitting the top of the channel, which is the red ascending resistance line, and then it drops down to the green support line, and then it hits the red line, drops down to the green line, runs up to the red. Okay, so then it comes back down, hit the green multiple times here, back up to the red. And then this time it didn't quite make it down to the green, but it's back up at the red again. So the candle's closed at the top of this channel. So it's a multi-day channel, and the candles are back at the top. So it's going to need to break above this channel and get a new trend going in order to head higher. Otherwise, this is signaling a potential temporary top. And what could happen, the candles could work back down into the bottom of the channel. Currently, the middle Bollinger Band is holding, which is at 273, so that would be the first big key level to hold on a pullback. And then below that is the 50 simple moving average at 258. That's lining up with the bottom of this channel. So as long as this channel continues, the uptrend should continue. If you see a break below the 50 simple moving average at 258, that would be a signal that this uptrend is broken and that consolidation is coming. Okay, so take a look at ATOS. Really nice move today, closed up 29%. So congrats everybody. It's got RSI at 64, so not quite at the overbought power zone. The big move today is it bounced off of the middle Bollinger Band and the 50 and 100-day simple moving average support zones. Notice the 100-day simple moving average at 47, the gold line. The 50-day simple moving average is at 49, which is the green line, and then you've got the middle Bollinger Band at 51. Those support levels held. There was a bounce and then a close today above this June 26 closing price. This is a chart that we've been working on for a while, and so now it's back above this key level, and so the next big zone to break is going to be over here at 70. So you've got some resistance at 70, and then the high close here on the 12th. That is lined up with the 200-day simple moving average at 77. If the uptrend continues here, this new push, we're looking for the 200-day simple moving average as the next target. Above that is the bottom of the gap, which is just in the low 90s. Notice there is a gap back here, an unfilled gap back in March, and so yeah, a run between 90 and almost 110 would fill the gap. Okay, so first things first, the high close here and 200-day simple moving average are the target if support holds, and yeah, and the uptrend continues. So look at the ATOS 15-minute chart. As you can see here, the share price was winding super tight into the close. So it closed at a flex point here. Either the red ascending resistance line is going to break, or the green ascending support line. If there's a drop below the middle Bollinger Band at 595, that's going to signal consolidation, and you could see a drop down here to 54, down to the 50 simple moving average. If it can break above the top of this channel, above 63, then that's going to signal more upside potential. Notice it did close above high close horizontal resistance on a volume spike, and there was a PSAR bull flip. So the chart is really strong, yeah, we're just going to see if the uptrend can continue, and yeah, it can work its way back up to this 200-day simple moving average on the daily chart. Okay, let's take a look at AVIR. Okay, so it's at 66 on RSI, still has a little bit of room to run. You've got Fasto at 58. So yeah, this chart's been heating up. The bullish development on this chart today was the breakout above this October 10th closing price. So the close above that level does signal more upside potential. This is another chart that we've been working on, another gap play. There was a gap back here in February, and so this is the top of the gap, this is the bottom of the gap, and so it had been breaking, trying to break out above the bottom of the gap level, and so it did that yesterday. It closed above the bottom of the gap, or on Friday, and then today it's followed through with a move above high close resistance. So that's all signaling that it wants to head higher. The next, notice there's a space on this chart here, so there's no candles, and so that makes the next big resistance levels up here at the 300-day simple moving average at 93, and that was also the high here from the 10th. So that's going to be the next key level to break. If it can get above that, a gap fill would be up here at $1.05. Okay, and then another one to take a look at is TEAR, and this chart's starting to heat up. Keep an eye on it. We want to see RSI get above 50. There was a bullish crossover here on Fasto. The black line crossed the red line, and Fasto closed above 20 after being below. So that's a signal the chart's heating up. If you look here, after being pinched, the green line's breaking away from the red line on ADX. And so what happened here today, the bullish development, was a bullish reversal confirmation. The candles on Thursday and Friday formed bullish matching low reversal pattern. So the close on Wednesday and Thursday were at the same level, and that formed a reversal pattern. And that pattern was on Thursday and Friday, and that pattern was confirmed today. And so there was bullish reversal confirmation and a close above EMA's 4 and 8 resistance. That was the first close above EMA 4 since support broke back here. And so the top of the candle today hit the 50-day simple moving average at 143. That's the big level to break, and the middle Bollinger Band at 142. So we're looking for those levels to turn into support and a new uptrend to begin. Notice that the 50-day simple moving average has been tested multiple times, and it's failed to turn into support. So once it does, that's going to be a big bullish change in trend. And then a close above the 50-day simple moving average, we'll be looking for a run up to the upper Bollinger Band and the 100-day simple moving average at 171. Notice how that was resistance back there. A close above that would be the big move that would signal a potential run up here. You know, you have some resistance here at 220. So yeah, keep an eye on TEAR. It is heating up. You know, in the MACD here, you want to see a bullish crossover. Notice how it's pinched on both time frames, and there was also volume starting to pick up for this thinly traded stock. It was the largest volume day since the 9th. Okay, so take a look at DRNG. This is the last chart in this video, and this stock here was a bounce play. These annotations have not been updated, but notice when we were checking it out, it was at extreme oversold levels on this was last week on Fasto, or RSI and Fasto. They were both at extreme oversold levels. It had formed multiple red candles in a row and multiple red volume bars in a row, and what we were looking for was a bounce off this support zone from back here in August. We were looking for a double bottom bounce, and it happened to break below that level on Friday. And our clue that people were loading was this long upper wick, or lower wick. And so the lower wick on Friday's candle signaled traders were buying. Even though the bears drove it way down here into the 5s, the bulls were able to drive the share price back higher. And so that created a bounce play mine opportunity. And then today was the payoff. The close today was below EMA 4 at 10 cents, so that was not the close we were looking for. We wanted to see a close above that level. Notice how the candles have been riding below EMA 4 since support broke right here on the 27th, and so it has to close above that level to get the bounce play going. So that's what we're going to be looking for tomorrow, a break above 10. Fail to break 10 and close above that level signals more downside risk, and the downtrend can continue. If it can break above 10, our next target's going to be EMA 8 at 13. So keep an eye on DRNG. We're going to see if it can confirm this reversal pattern. Notice that it's got a it looks like bullish one white soldier reversal pattern formed today. So we'll be looking for reversal confirmation and a close above EMA 4. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.